There are so many chart patterns to trade with in the financial market, but the only two patterns I personally trade with it's double top and double bottoms, head and shoulder, and inverse head and shoulder. I know I said it too, but technically they are two, as double top and double bottoms are basically the one pattern but flipped upside down. These are the only two patterns I trade with, and they are not nearly 100% profitable. They are not 100% accurate. The accuracy I get is around 60 to 70%, but along with that, I get a really nice risk to reward ratio on these type of chart patterns. Normally 5 to 1, 6 to 1 risk to reward ratio I get out of these chart patterns. So if you want to skip to the technical analysis of today's natural gas, gold and silver, you can skip to the next part of video. I'll put the timestamp up there, but it will be beneficial for you to watch this part of the video, as I'm going to I'm going to show you the trades we took using these chart patterns, and I'm also going to show you how we take the trades, how to identify these chart patterns once we get a valid entries, and how to set up your stops and targets using these chart patterns. So let's start our analysis with natural gas. So if you remember our last week trade, we took this double bottom, nice double bottom trade. We are getting a valid double bottom right here. So let me go back in the replay mode and show you how we took this trade and how to set up your stops and target once you see this type of chart pattern. The market was right here when we took this trade, right here. So to identify a double bottom trade, in this case, I normally look for my first bottom and rejection. Once I have a rejection, I draw a box from the body of the candle to the wick of the candle right here. What I want to see now, I want to see a hit of my zone, a rejection in this box without closing below my box. Let's see how it plays. And yes, once we have a rejection, I look for a bullish pressure or a green candle. So let's see how it pans out. Not yet, not yet. Right here. So we get a nice 382 candle right here. This candle, this green candle, we got a bullish pressure right here. So the one way to take the target is an aggressive way to enter the market. The aggressive way to enter the market is to enter right on this candle. If you want to go 1 to 1 risk to reward ratio, you can still go 1 to 1 according to the ATR. You can set up your target right here. This is the one way to enter the double bottoms. But like I said, for double bottoms and double tops, I normally go for 6 to 1, 3 to 1 risk to reward ratio. But just for the sake of example, as I said, I can't explain every single rule here. For that, I'm building a course, and hopefully in next couple of weeks my course will be ready, and in that course you will know every single thing you need to know for trading. And in order to become a professional trader, I'm putting every single thing I have learned, I have made in that course, so that you guys do not have to rely on anyone's signals. We can go to ATR is right here in the top corner, and you can set up your target. In this case, we are going 1 to 1 risk to reward ratio, and you can see the market hit our target easily. So once our target is hit, the second way you can enter, if you're not going 5 to 1 or 6 to 1, then you can enter a second trade. How to enter the second trade? Once you have a hit of the target, you can draw a neckline. So neckline is basically a resistance created with this double bottom move right here. You can make a neckline from the body to the wick of the neck, which is right here on this red candle. So the second way to enter is after the break of the neckline, and I would normally look for a retest of the neckline. So let's see how it plays out. Here we have a break of the neckline. Some traders, they normally entered straight after the break of neckline, but I normally wait for a retest. So I wait for the retest with a bullish pressure. Right here we got a nice engulfing candle, and the second way you can enter is set up your targets right here. You can either go 1 to 1 risk to reward ratio, take 2 ATRs above, you can even go 3 ATR above. So in this case, let's do our example. So our target has been hit right here. The second target has been hit successfully. So once we are between our zones, this is what I teach in my email analysis, and which is what I send to my priority members. Once we are between the zones, I look for a pullback trades only. So in this case, I will only look for a pullback trades. Let me show you. Awesome. We entered on this candle. Market came up, break the supports, break the resistance zone, gave us a pullback with followed by an engulfer entry and the ATR. You can see the market is coming down with a nice pullback and followed by our engulfing candle, which is right here. And in this case, you can see the market ended up hitting our resistance zone, followed by a nice engulfing candle, and market rejected our zone right here. And we can set our targets accordingly on this candle, which has been hit as well. Let me show you this trade we took last week as well. Right, our target has been hit. So this is how I take trades. This is how I mark my zones. If you want to learn these zones, you can join one of my partner brokers. Once you join them, minimum deposit of $500. Once you do that, I will send you the weekly report, weekly forex report, where I will mark these zones for you, and you know when to take a counter trade once the market reaches our major level of resistance, a sell trade from here, and a buy trade once the market come back to our support zone. You can take some buy trade, and between that we can take pullback trades as well. This is how we took this natural gas trade from the last 10 days. Let me quickly show you the trade we took on palladium last week as well. So now, as you can see here, we have a nice double bottom move with an engulfer candle, which is a very big candle. Once we have a hit of this zone, I'm expecting a bounce from this zone, as this is a very major level of support. Once we have a rejection, as I've already showed you in my previous video, I draw my box, which is right here. The market gave us a nice bullish candle right here. So we are 1 to 1 now. This to reward ratio. So if you see here, the target has not been hit yet, and the market is still moving up. So this is how you take double bottom trades, and this is how you set up your target. Let's jump on to our natural gas analysis for today. So as you can see, the market has formed a nice double top move. Let me show you what I've said in my previous video. And as I said that I'm still expecting a move up and forms a double top. Awesome. So as expected, the market gave us the exact move, and we got a nice bearish pressure with this candle right here. Again, guys, there are so many other rules how I trade double tops and double bottoms, which I'm gonna teach you in my upcoming course. So based on this trade, we have this candle right here. If you take target, set up a target here, and if you go 1 ATR is 13, set up your target to 13, which is right here. So the target still not been hit yet, but now as we have our double bottom move formed, what I do, I draw a neckline right here. So what I want to see to take next trades, I want to see a break of my neckline. Once we have a break of this neckline, which is around 4.396, once we have a break of neckline, I would look for a retest with an engulfing candle, and I expect another move down to this green zone, which is 4.224, and it goes down to 4.154. Once we hit this green zone, I will look for trades from here, either engulfer, pin bar, or double bottom moves, as you guys already know how I take my trades. Let's quickly check gold. So awesome, what do we have here? The market hit our zone we've been waiting for. I still want to wait until the market hit our gray zone, and I will look for a strong selling reason from here to take short trades. We got this pin bar as well right here. Even if you have entered using the pin bar, stop loss wouldn't have been hit yet, but the market moved up, and we have this engulfing candle right here, and I expect to see a market to push down at least to 1876 based on this bearish pressure. And let's check silver. So I was expecting a double top move from silver, and silver has not respected this double top move either. It just moved up due to the ongoing problems with Russia and Ukraine. So because of that, we got a move up as we still don't have any sort of entry on silver, but this is our pink zone is our resistance zone. I expect a push down with a bearish pressure. If we have a bearish candle like a engulfer pin bar, we can take short trades and expect a market to move down. So if we have a break of this pink zone, then we can expect to see silver to move up to 24,550. So that's all for the commodity market, guys. If you have any questions, you can leave me a message on Instagram. I'll get back to you ASAP. I hope you trade green. Till then, take care.